Share Shootout, brought to you by Lion of Africa Insurance, insuring South Africa's future.
Welcome to Share Shootout here on CNBC Africa. I'm Bruce Whitfield. Before the break, we had Chris Gilmour put through two very compelling arguments, and Roger also putting through some very clear arguments as well. Roger Williams from Centaur, his bets were for Lewis and Times Media Group. Chris Gilmour giving Lewis the thumbs up, the thumbs down, however, to Times Media Group. Chris Gilmour's picks of Adcorp and Transaction Capital have both been obliterated, which means that, Roger, you are in a bit of a tight spot right now, because you like companies run by Scotsmen. Give us your sense, please, in 30 seconds as to why Foschini Group, in a customer-destroyed, fraught, devastated, horrific consumer environment, you'd still buy a share that sells clothes to people on credit. In 30 seconds.
Firstly, it's cheap. It's a lot cheaper than many of the other credit-oriented retailers out there. Back in the day, this was the darling of the sector, and of course that position's been usurped by Truworths and now more recently by Mr. Price. But nevertheless, it's got a wide variety of goods, run by a Scotsman, as you say, which only adds to the attraction. This thing, I think, it has been a bit neglected in recent years. Okay, it's in the wrong kind of space at this point in time, but nevertheless, I think there's value apparent there.
Okay, now, I just have to pick apart some of the logic here. It used to be the market darling. It's been usurped by Truworths and Mr. Price. It used to be this, it used to be that. It's in a lousy sector. So why do I want to buy it?
Because it's coming back.
Is it bouncing back?
I think so.
Roger. You have to say nice things about it. You can say terrible things about it.
Let's look at the facts. First of all, I don't think it's done badly in terms of revenue growth compared to its peers. I think its revenue growth over the last 3 years has been very similar to both Truworths and maybe lagging Mr. Price slightly, but not materially. So I don't know if it's ever really been behind. I think it's maybe more of a perception issue. Where I've got a problem, how much were its historic earnings? How much did it earn in the past?
Yeah, and the problem that has been, Roger, is it's been a choppy picture. Whereas Truworths has been very much like that, and Mr. Price certainly like that over 27 years. Whereas this one, if you saw it in the 90s, late 90s, and a few years ago as well, it took a bit of a caning on occasion. So it's been more volatile. Okay, so I think it's now...
Volatility provides opportunity.
Yeah.
In a retail market that keeps on rising, it becomes very difficult to find opportunities to buy some of these shares. Yeah. Volatility provides an opportunity to provide a volatile but good quality company, surely, slightly more cheaply than you could get its peer group that go up in these smooth bonus.
How much did it earn last year?
How much did it earn last year, Chris?
Or to March this year. I think the year ends March. What are you anticipating?
The year end March, I think we're looking at earnings growth about, 15-16% or thereabouts.
Yeah, but underlying earnings.
I can't remember the actual figure. I look at
my only concern is the sector. We've just released the latest economic stats, 0.9% growth. Is retail going to be the place to be?
This is from a guy who chooses Lewis Stores as one of his picks.
It's on a 6 PE. Let's brace for the worst. It's gaining market share.
A 13 PE clothing retailer.
That's it. That's the point. I mean, it's probably grown earnings at a similar clip over the last couple of years. Yeah. So I want to be in the cheapest, most solid stock. And I'd rather be in a 6 PE than a 13 PE because that's under half the valuation.
But of Adcorp, Transaction Capital, and Foschini is the least undesirable of the three.
I would say so.
There we go. So he's a satisfied customer, Chris Gilmour. Right, Roger Williams, I then need to ask you why it is that you would like to have as your final pick this evening the very fabulous Mr. Frank Thompson's Advtech. Your 30 seconds start now.
Well, if you look, they're the leaders in schooling, education, private schooling. And there's a lot of demand there because the government schools just can't handle the quality of the education's not up to scratch. And their brands, Trinity, Crawford, Abbott's College, are doing exceptionally well. There's good demand, it's annuity income, and they're growing that. They're putting up a new school every year, and their Trinity brand, I think that's got lots of legs, and that's going to drive growth into the future. Also, cash flow exceptional because everyone pays up front. The dividend yield's about 4%.
You were telling us about your kids earlier and how much they want you to win this competition. They're 10 and 12 years old. Do they go to Advtech schools?
No.
Okay, just as a point of order, Your Honour. Chris Gilmour, your response.
Look, in very broad conceptual terms, Roger, difficult to argue with you, that and Cara. My only concern would be in the valuation. What are we talking about in terms of a valuation here?
It's on a multiple of 20 times historical earnings.
Yeah, I think in about 40 cents it's trading at, the average price has been about 670. So what's it, about 16 or 17 times?
So it's in line with the market, maybe a little bit higher.
Yeah, it's similar to the market, but the cash flow is exceptional. The dividend cover is only 1.6 times because everyone pays up front, so their dividend yield is very good. And looking ahead, you've got this annuity income as the school kids come for 12 or 15 years. It's annuity income. School fees have been growing above inflation. I think inflation's been 6, school fees 8 or 9, which is great.
What does it take to keep talented teachers inspired enough to stay within the system and not go into, I don't know, marketing or something?
I think they're paying them enough. They get a good premium. Also, teachers, it's a vacation. So I think the teachers are happy because they're getting remunerated fairly. They're providing a quality education. And they don't necessarily want to go into another job.
Shall I tell you my concern here is I bumped into Frank Thompson at the airport the other day and my kids are running between my legs and behaving like absolute hooligans and he's trying to recruit them. He's prepared to recruit them. He's desperate. It's an aside, of course. Frank Thompson's Advtech. Great business, great brands. It's in a space, a growth market. More and more South Africans with money, more and more concerned about the long-term future of their children in this country, don't have too many options open to them, want the best quality education they can afford. The traditional private schools are 200 to 300,000 Rand a year before you buy socks. This isn't a sweet spot.
The good schools are fully booked.
With waiting lists.
And I think some of the private schools overinvest. That gives them a margin of safety. I just look at my kids' school, they're putting up buildings everywhere. It looks like a waste of money to me personally.
Well,
they're overinvesting.
You're paying the fees. So, Chris Gilmour, can you accept it or do you shoot it down?
I'm afraid I have to shoot this one down. I
Okay.
like the concept, not wild about the company though.
There we go. It gets me to a position now where I have to make a call. Who's made the most compelling arguments? Is it Chris Gilmour from ABSA Investments, who has chosen Adcorp, Transaction Capital and Foschini Group, with a reluctant acceptance in the last dying moments of his share-picking spree by Roger Williams that, look, if I have to take it, I'll take Foschini. Roger Williams is something of a street fighter, however, as we have learned to discover. Roger Williams from Centaur says Lewis, Times Media and Advtech form a better portfolio for the future. Now, I've got to make the impossible choice. Who stays and who goes? Last week was easy. This week is considerably harder. I need to make a call, which I'm not prepared to make. I don't know what to do. For the first time on the show,
Come on.
Chris Gilmour, you're gone. Mostly because I wanted to preserve his record of 100% success rate. It was so marginal, there was so little in it. If you disagree with my decision this evening, tweet me, abuse me, and tell me how wrong I am. Mrs. Gilmour, that doesn't include you. That's all we have time for this week. We'll be back on Thursday on CNBC Africa. Remember, catch me on Twitter. Give me your share shootout suggestions and your thoughts, especially about tonight's outcome. Did I make the right call? I'm feeling a bit iffy about it, but hey, too late. He's gone. At Bruce Business on Twitter. Catch us next week again as we continue to pick out a winner and shoot out the rest. Bye-bye.